Hello, this is the chart profit video. Going up to 2 hours into the trading day, Friday 8th of June. Friday 25th of May, controlling price for the S&P E-mini, the 12-month controlling price moved to 27.18. As I said at the time, this has lifted the value area high and removed the resistance at 27.45. Over the last 5 days, we've had value areas printed entirely above that level. We had aggressive buying marked here on Wednesday. Previously, there was aggressive buying on Wednesday the 30th. All of those are positives. On the pulse chart, that significant buying was here and here. Those two green bars. The last significant selling that we saw was back here in April, and from that point we've seen 7 days of aggressive buying, no selling. Market has generally moved higher, so this is effective buying. The breadth has improved. This green bar here in the middle is a positive, and at the bottom, the fact that the price momentum is above zero means the daily trend is up. This is a pretty positive looking pulse chart. This is a chart with the spider at the top here. Through Thursday's close, you can see over the last few days the market has generally moved higher. The RIDEX ratio at the bottom here is not following price higher. We did hit a multi-month peak at this point, but as the market has moved higher over the last few days, the RIDEX ratio has fallen away. Over here we have the highest ratio in the database at 27.55. That's where the market peaked out here. We fell down here to a 43-day low in the ratio, and that marked pretty much the low. We're kind of in the middle of that range currently. This historically, anything around 20 is extremely high historically. Clearly not as high as it was back over here. We looked at this in last week's video. This is the commitments of traders data for the S&P 500 regular contract. The commercials, smart money, increasing their net longs. This looks pretty bullish, or rather let's say that they are bullish. Small traders particularly are heading lower their net position. That's pretty bearish from their perspective. Public poll this week saw an increase in the bulls percentage to 38.9%. Bears percent also just slightly higher. If you read this in Monday's ebook, we know that 8 weeks ago here, poll was pretty bearish. Bears percent at that point reached 42.8%. 8 weeks ago, that was the highest since March 2017. And again, in the Investors Intelligence poll, if we look at bulls minus bears, the net, and we take a 4-week moving average, that's the black line here, and we can see that that reached 24.4 4 weeks ago. That was the lowest since November 2016. So some pretty strong bearish sentiment. Again, market has obviously come higher from there. Just to remind you, these are contrarian indicators. I know I'm going over previous ground, but this is just a reminder. Again, here in the Lipper US fund flows data, 8 weeks ago, 4-week flow number fell to a negative $29.9 billion. That was here. That was the lowest since this point, a negative $33 billion in December, and that was the lowest since 2008. Quick look at the current charts. Reminder of support resistance level. The 18 months on the spider is at 271.70. As long as price stays above that level, it's in a strong price location. As long as that controlling price does not migrate, price back below that level would obviously be a negative. IWM, the Russell 2000 Small Cap Etf, you can see immediately small caps have been outperforming over the last weeks. Its support is relatively much lower, and you can see that it's broken out above the high from earlier in the year. We said last week's video that that resistance had become support. Here looked like a confirmed breakout at that point. UK's Footsie 100 index, here's the previous peak here, and we tested that level at this point, and this does not look like a confirmed breakout. We've also seen just over the last few days the emergence of a 3-month here at 77.11, and we're ending the week below that level. And this is the German DAX, a lagging index at the moment. Here's the previous peak, and if we look at the halfway point through to this low, it's this dotted blue line here, and we are currently at the end of this week just managing to hold on to that support. Bonds have been volatile. This is TLT, the T-bond ETF. Down here we have the 6 month. That's the current controlling price of the minor distribution. We just found support here this week. This looked like a pretty bullish development when TLT printed above the major at 121, but it couldn't hold it. I'd suggest a clear high or low above that level, or a lower high below that level will indicate the next directional move for bonds. This is USO, the oil fund ETF. At this point we reached the highest level since November 2015. We sold off from that point, but as long as the ETF holds 1279, which is the 12-month controlling price right here, it's still in a strong price location. Gld the Gold ETF, like TLT the bond ETF, sitting between two important levels. This time the major is underneath price action. That's 121 for Gld. So currently we're printing above that level, puts it in a long-term strong price location. But the 4-month controlling price at 125.23 is above the current price action. But again, as long as we hold this major here, it's in a strong price location. I'll assume that we're heading higher. Just have to overcome this level, which is now resistance. But price up here would be positive. If we see a clear high or low above that level, that would be bullish. Okay, I sample the distributions and the controlling prices on different time frames. As you know, on the daily bar or daily time basis for the dollar index, the major is down here at 89.54. An important level though from a 30-minute basis is 94.80 here on the chart, this red line, and we have just tested that over the last few days. So a big confirmation for me for this dollar strength would be a higher low above that level, time printed above that level, and also importantly what happens on this chart. As we know, back in April the major moved to, or migrated higher to this level, 123.30. Almost immediately when it did that, the chart went into free fall. We have the 1 year at 117.55. Currently the chart is trying to print time back above that level. So if we see the chart here holding above 117.55 and maybe picking up from here, but time printed above that level, and the dollar index unable to overcome this level here at 94.80, that would be kind of non-confirmation of this strength that we've seen recently in the dollar. And we would also watch this level on the pound, which is 131.70, which is the major controlling price. And although there's been a really sharp sell-off since the failed test of that previous high in April here, we are still holding this major level. Okay, that concludes, and once again I thank you for watching.